Hello everyone, welcome to our Hong Kong R&D Center series, Part 1. I'm Henry Kwong, the tax partner of Cheng & Cheng. In Part 1, I will explain the super deduction on R&D expenses in Hong Kong. The R&D super tax deduction has been effective since the year of assessment 2018 and 19. It is a special tax concession offered by the Hong Kong government to encourage corporations to set up R&D center in Hong Kong. It is a breakthrough in Hong Kong taxation because it is the first time the Hong Kong Inland Revenue Department will allow more than 100% tax deduction on an expense. Under super tax deduction, the first 2 million of qualified R&D expenses are eligible for 300% tax deduction, while the remaining amount is eligible for 200% tax deduction. For instance, a 5 million of qualifying R&D expenses will have a 12 million of tax deduction being allowed. The IRD requests for taxpayer to fill in a new form, Supplementary Form S3, to provide preliminary information in respect of their R&D expenses so that it can have an early assessment on super tax deduction. There are 3 key requirements for R&D super tax deduction. First of all, the R&D activities must be done in Hong Kong because the whole tax incentives are to encourage the setup of R&D center in Hong Kong. Second, R&D activities should bring fundamental changes in the product or services offered by the taxpayer. There should be significant advancements. Normal product design and development are not R&D activities. Last but not least, the R&D activities must be done by either the taxpayer itself or outsourced to designated local research institution. A list of or qualified R&D institution can be found in the government website. R&D activities performed by any other parties, including the related company of the taxpayer, are generally not eligible for super tax deduction. Here it comes a summary of the super tax deduction requirement. First of all, the R&D activities have to be done in Hong Kong. If the R&D activities are done by the taxpayer itself, only 2 types of expenses are eligible for super tax deduction, which are consumables and staff costs. They have to be directly related to the R&D work in Hong Kong. Other R&D expenses are only eligible for 100% normal tax deduction. If the R&D activities are subcontracted to designated local research institution, you just have to check with the R&D institution whether they perform the work in Hong Kong or not. If they perform the work in Hong Kong, the whole amount of R&D fees you pay to them will be eligible for super tax deduction. Thank you very much for your time. While R&D expenses could be eligible for super tax deduction, it is also subject to additional requirements in order to claim tax deduction. Very often, multinational corporations fail to claim tax deduction on the R&D expenses earned by their Hong Kong company, which significantly increase their Hong Kong tax liability. For further details of the Hong Kong tax risk on R&D expenses, please watch our past 2 videos. If you would like to obtain our PowerPoint slides, please sign up with your email below and you will have the access link. Thank you. Thank you for watching our video. If you want to know more about Hong Kong and China tax update, please provide your email to us by accessing to the link below. We will put you in our email list so that you can know more about our tax updates as well as our seminar invitation. Meanwhile, if you have any questions on Hong Kong and China taxation, please do not hesitate to contact us through email or the Facebook Messenger. Thank you.